Well, folks, we got a lot to get into in today's video. You're going to love this one, okay? First off the top, we're going to talk about everything that's going on with CPI, why this matters so significantly. There's a certain number that came in today. This is massive for the future of the stock market. So if you're wondering where this market's going over the coming months, this matters in such a significant way, okay? So we're going to talk about that, okay? I got a ton of stocks to talk about it today, a ton of individual stocks, including a few stocks I haven't talked about in quite some time on the channel that I want to share some perspectives on those stocks as well, because I know there's a few people that wanted me to speak about a few stocks there. So it's going to be an action-packed video, folks. It's a busy one. I appreciate everybody joining me as always. Thanks so much. Hope you're having some fun in this market, because I know certainly I'm having some fun, okay? So let's get into this. Before we get into this, by the way, a few pieces of housekeeping. One is I just posted the link inside the Patreon 3 hours ago for a chance to win a free membership in my private stock group. We do this each and every month. The drawing's in a couple days from now. So if you want a chance to win a free membership, we're actually drawing 2 names this month because now we're over 1,000 members in the Patreon. So if you want a chance to win in there, make sure you get in there ASAP. And yeah, that will be, it's always linked in the description as far as Patreon. You also obviously get to see the moves I'm making in the Patreon portfolio, the buys and sells every single week, plus be part of the Discord chat. So that'll be in the description area. And also I put together a free workshop last night. This is specific for folks that make $100,000 plus a year. So if you make over $100,000 a year, definitely check that out. It's absolutely free to get access to that. I'll send it over to your email, and that will be the pinned comment down there for access to that. Make sure you definitely, it was like a 30-minute plus workshop I recorded, and it should be very, very helpful to you out there. Okay. Alrighty. So as far as inflation, numbers came in here today, 4.9% CPI, okay? That matters in a significant way. Now, for workers, real average hourly earnings, adjusted for inflation, rose 0.1% for the month. They're still down on a year-over-year basis, okay? Now, this matters in a massive way for 2 fronts, okay? One of the fronts I'll explain in just a moment here, but the first one it's in regards to real average hourly earnings. This is one of the most underrated things that is ever talked about in the economy ever, okay? Let me show you a chart that is absolutely shocking here, okay? Check this out. Wow. This shows you median real earnings for workers over time, okay? And basically for, honestly, like 2 decades, it seemed we were kind of stuck in the 340 level, okay? And then we finally broke out of this spell around 2014, and we had real earnings of folks go up substantially for about 7 years, okay? And it was a great thing. We had some dips here and there, but overall, like, workers got in a better and better place, okay? And what comes along with a situation where real earnings go up, right? And let me explain that just a little deeper, okay? So here's the thing, okay? If you get a 3% raise from your workplace, let's say you work for a company, you get a 3% raise, but let's say everything in your life is 3% more expensive the next year. You never got a raise. You're just breaking even, okay? You're just breaking even because we know everything gets more expensive over time. Now, if you switch jobs and let's say you're going to make 10% more from your new job than your old job, and everything in your life only went up 3%, you're winning, okay? Now your real earnings, your real wages just went up, okay? So this is a very important, underrated metric. And when you're in a situation in the economy where real wages are going up and up and up, it's going to be insanely epic for the stock market, for the economy. And think about this, right? For 7 years, we basically had real earnings kind of on an upward trend, right? And we had some dips here and there, but it was on an upward trend. And what did that mean? That meant booming earnings for companies, right? It meant a booming stock market and a booming real estate market over that 7-year span. And it meant small business confidence through the roof. And that was a great thing. But obviously, we've been in a troubling area for a while now where let's call it real wages haven't been in a good place, okay? And that's not something we need to see. We need to see real wages going up over time. And to show you how much this matters, check this out, okay? U.S. small business sentiment slumped to more than a 10-year low here last month, okay? This is what happens when real wages are going down or stagnating, but specifically when they're going down, okay? This is what happens. Small businesses are not going to feel optimistic at all. They're going to feel in a bad place, and that's exactly what we see in the charts here. This shows you the small business optimism index over time, right? And this is where we're at very recently here, right? We can fix this. If we fix inflation and we fix real wages, believe me, you'll start to see this trend up and trend up and trend up again. But you got to fix those two things because small businesses have been sliced and diced by inflation, and you've had real wages being in a bad place here for quite some time, for basically 2 years plus, right? That creates a dynamic where small businesses aren't going to feel optimistic about what's happening for their business and where they're going over the next 6 to 12 months, right? So you can correct this now. Over time, if you're in the 100 to 105 range, things are great, okay? Things are great. When small businesses are feeling like this, and your economy is going to be very strong if you can be in the 100 to 105 range. Things are insanely great, like almost out of control great, when you're in the 105 to 110 range, okay? And the last time we were there was probably around, it looks like about 2018 or so. That was the last time we were, in that sort of range, especially up there. And then actually right prior to Rona, we were over 105 as well, right? And we had a really good economy. Inflation was in control, real wages were in a healthy place, and small businesses were optimistic. And obviously, small businesses have been in a tough place, obviously, during the Rona cycle, but things held together well. And then, obviously, in the past 12 to 18 months, small businesses have just been in a bad place, okay? And let's be honest, I've always said this, and I always will say this, okay? The U.S. economy runs by small businesses. It always has been that way, and it'll always be that way. You show me small businesses are doing great, and I'll show you a super strong economy. You show me small businesses are doing bad, and I'll show you a weak economy. That's as simple as that, okay? Now, this goes way deeper than that, and this goes way bigger than what I just showed you there, okay? Because now we're looking at consumer sentiment, right? And so if you look, we had the worst consumer sentiment numbers we've had ever in the history of that survey. We had that in 2022, right? But things have started to improve, okay? Why have they started to improve? Well, inflation has gotten better, right? It's become less of a problem. It's still a problem, right? 4.9% is still a problem, but it's much less of a problem. And at the end of the day, like real wages are starting to at least correct a little bit, okay? We still got a long way to go. And so what have we seen? Consumer sentiment improving. It goes right along with the whole story, right? But the thing to remember about consumer sentiment, we are still low, folks. We're still very low with consumer sentiment. So if you want to look at this, you could look at this on the bad side or good side. The bad side, you can say, well, we're still super low for consumer sentiment. Consumer's still not in a good place. True. The other side, you could look at it, right? Glass half full. You could say, consumer sentiment still in a bad place. We're going to get a lot better when it comes to consumer sentiment. And we have a long way to go with this over the next 12 to 24 months. And if we get consumer sentiment about here, where do you think the stock market's going to be in that environment? Where do you think the economy is going to be in that sort of environment, right? And so you can always look at things glass half full or half empty, depending upon the way you want to look at it, right? This matters a significant way. Now, this is a second reason why this is so huge, which has played out here and which has happened, okay, is we are finally at a place now at this point in time where the CPI is lower than Fed funds rate, okay? This is massive. And I mean absolutely massive. Because what a lot of folks will say out there, okay, and a shout out to Mav, he's certainly one of the people that says this, okay? He always would say, you've got to get the Fed funds rate to above the rate of inflation, above the CPI, okay? It's official. We're finally there now. Now you can say the Fed should have went way faster than maybe they went. And I'm not going to get into that whole argument, but some will say that, right? But the bottom line is, now at this point in time, CPI is lower than Fed funds rate, which means the lower and lower CPI comes in at, and the more the Fed funds rates is in the fives, right? The more likely it is the Fed cuts rates as soon as they see any sort of weakness. And believe me, the Fed's going to look for any reason, okay? Now, as of right now, CPI is around the same as Fed funds rate. It's slightly lower, that's good, but we're still roughly in the same area, 4.9 versus a Fed funds rate of 5.1, right? Okay, we're roughly in line. What happens when CPI goes to 3.5, 3.3, right? 3.2? That's a point in time where the Fed can easily cut rates at that point in time because it says, hey, CPI is coming down. It's significantly lower than Fed funds rate. We can lower from Fed funds rate of 5 to 5.25 to a Fed funds rate of 4.5 to 4, something like that. And you'd still be above CPI at that point in time, okay? And that matters in a significant way because if you're talking about a chance of cutting Fed funds rate, then you're talking about stocks deserve to obviously be valued more. That's the way the market's always been valued. The lower Fed funds rate is, the higher you're going to value stocks, right? The more risk on you can go out there. So it has big implications in regards to the stock market as well. And then obviously it has implications in regards to the economy and how people are feeling and things like that, okay? Now, let me show you the latest Truflation numbers, okay? This is big, okay? The latest Truflation numbers are at 3.73%. Okay. Now, what this tells me is basically next CPI numbers that come in, which will be at this time next month. Okay. We're going to likely be in the low 4s and potentially even the high 3s coming next month for CPI, which means at that point in time, then we're talking about a significant gap between what Fed funds rate is at versus what CPI is at. Okay. And you say, do I trust Truflation numbers? Absolutely. Okay. Absolutely. Truflation in the month of April had us in the 4s. And sure enough, we came in at the 4s. Now, Truflation had us at the low 4s versus CPI high 4s. And so it's never going to be a perfect correlation between government numbers and what Truflation has, but it's pretty darn close, okay? It's pretty darn close to being very accurate. So I'm going to go out there and say we're low 4s to high 3s coming next month. And that's going to matter in a significant way to the market. Because then, at that point in time, you could be talking about for the month of June, when the June numbers, which won't come out till July, then you could be talking about a situation where we could be mid to low 3s. That's when we start. And this is exactly what I predicted all along. I said this summer, you just wait. We're going to be in the 3s, and I'm telling you, everything's lining up perfectly to get us in the 3s this summer. We'll see what happens. Don't want to get too excited too fast, but everything's lining up here, okay? So that's in regards to the market, CPI, all those sorts of things. Now I want to talk about a ton of stocks, moves I'm looking at, stocks I'm looking at, opportunities I see in the market where I see some stocks bottoming and moving up in all those sorts of things. Okay, so now we're going to get into individual stocks. Palantir, first off here, okay? So stocks had obviously a tremendous run over the past 5 days. The stock's up about 33% roughly, okay? I do not expect money to stop coming in Palantir anytime soon. It does not mean every single day the stock price is going to go up, or every single week, or every single month. But I can tell you, the flows of money to Palantir is going to get bigger and bigger and bigger and bigger. And this is just the start of the Palantir run, in my opinion. As we get closer and closer to potential S&P 500 inclusion, you're going to see more money and more money come into Palantir. In Palantir's I don't think there's a stock that's set up more perfectly for the next 12 months in Palantir in the entire stock market. And I truly mean that. You're talking about a stock that is setting up for S&P 500 inclusion, and that's looking like a very realistic possibility, right? And on top of that, you have them perfectly centered in this AI movement. Palantir's been working on AI for a long, long time now. And all of a sudden, every company out there has to have an AI strategy. Oh, guess what? Who's at the cross sections of data and artificial intelligence? Palantir. So suddenly the whole market has to consider Palantir's market over this next 12 months. That's massive. Do you know the sort of deal flow Palantir is going to have for this next several years based upon this? Based upon what they have for a product here. It is absolutely massive. So I honestly don't think that there's a lot of stocks that I think are going to perform tremendous over the next 12 months, but I don't see a stock being more perfectly set up than Palantir just for the next, we could talk about the next 5 years and 10 years for Palantir, and that's super exciting, but just for the next 12 months. And so that's where you're at this perfect intersection for a stock like Palantir, where it's the perfect stock, not just for the long term, but now it's the perfect stock for the short term as well. The under 12-month crowd. That's the holy grail, man. That's the holy grail for a stock when you got the long-term story and you got the short term, okay? And so in regards to me with Palantir, right? Like, I can't even consider selling the stock. Are you flipping my flapjacks? Like, give me a break, okay? We're up $9,700. This is small money, in my opinion, compared to what we will be up over time in Palantir. Small money, folks. Small money. Wait to see the gains at this time next year. Come back and check them, okay? Come back and check them. And in regards to Palantir, it's now the second biggest position for me in the Patreon portfolio. I don't see that changing. I think I'm going to continue to build this position bigger. I don't see anytime soon me saying, oh, Palantir is too highly valued now. I think I'm going to continue to buy the stock and continue to buy the stock and build it bigger and bigger and bigger. The only position I have that's bigger in the Patreon portfolio is Amazon. And so I feel comfortable. With Palantir, could it be my largest stock in the Patreon portfolio? It could be. Why would I be scared with a stock like this, right? They've got a sticky business model that I think is going to be much stickier. They got the whole market that has to consider their products. And their balance sheet's one of the best in the world. Like literally no debt. Cash loads to the sky. Are you freaking kidding me? Just getting into profitability. They're in the infant stage of profitability here. That profit's going to expand exponentially over the next 5-10 years, in my opinion. Oh my gosh, okay. That's just a perfect scenario. And they got a diversified business between obviously government and obviously big commercial customers. Never mind if they go lower end over time, which is certainly a possibility, and attracting more mid-sized businesses and small businesses and getting their customer count into the thousands rather than the hundreds. I mean, my gosh, okay. So in regards to a stock like Palantir, I wouldn't be surprised. I wouldn't be surprised if over time this becomes the biggest position in the Patreon portfolio. Kind of like Tesla ended up becoming the biggest position in the public account. I didn't try to make Tesla the biggest position in the public account. It just became that because it went up so dang much. I built it into a decent sized position. It might have been the 5th or 6th biggest position. And then it went on its epic run and it became the biggest position in there, right? Now Meta's actually eclipsed Tesla in regards to the biggest position in the portfolio. But nonetheless, folks, this is what I see playing out with Palantir. We'll see how it all plays out and shakes out. But that's what I see happening there, okay? Honest is honestly going on a massive run. I mean, when you're, eclipsing even Palantir's gains over the past 5 days, you're doing something right? So it's at 40% gains in the past 5 days, right? Thing to understand about Honest, long way to go, okay? This is, in my opinion, like, where Palantir might have been a quarter or two ago, okay? This stock has so far to go, okay? We still got to see the margins get back to the 30s, okay? Wait to see where the stock price is at when they get their margins back to the 30s, which I'm 100% convinced Carla's on the right track, and she'll get these margins back to the 30s, okay? And then we can go from there and then talk about 35s and 40s and things like that after that. But in my opinion, she's going to get those margins back to the 30s, and wait to see what happens to stock price when those margins go back to the 30s over the next few quarters, okay? And then we still got to go from a net loss to net income. We haven't even reached profitability with Honest, okay? And with the margins going back to the 30s, which I think they're going to do over the next few quarters, and those losses dwindling over the next few quarters and then getting to obviously net income, I expect for this company. I mean, wait to see what happens with that stock price when that happens. Oh my gosh, okay, that's going to be a whole different kind of game change in regards to that one, especially when you're in the gulag, okay? When you're in the gulag, and you can put up those sorts of numbers, that's how you get out of the gulag. And that's what I see playing out there. I think there's a possibility Honest could come out of the gulag before they actually get to positive net income. I think when they're just getting somewhat close to break even, I think by that time the stock could already be out of the gulag, and especially if they see margins. If you see, what I believe is going to happen here is margins probably bottom in Q1, the quarter they just reported, and they get a little better in second quarter, a little better in the third quarter, much better in the fourth quarter, and just continue to improve. That's when Wall Street starts to look at the stock and they're like, margins are improving quarter after quarter after quarter after quarter. And Honest long-term should be a margins in the 40s. That's where it should be long-term. And so this is an early stage margin game there in profitability story there, okay? Amazon, chill please. Can we calm down a little bit, okay? Amazon's starting to run, and it's scaring me a little bit, okay? It's up about 28% year to date. If you know me, you know this is the number one stock I'm focused on buying. That's a mega cap stock this year. I don't want this baby to run. The good news for me in regards to Amazon is I'm a buyer all the way to $150 a share. So basically, I still have this entire year to work with for being a buyer, but on the flip side, I would much rather pay $100 a share than $140 a share. I can buy a whole lot more shares each week when I'm buying the stock at $100 a share than I can $140, right? And you do the math over a time period. So can we chill a little bit, Amazon? Please, 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 okay? Let's talk about a few Jack Jackson companies. We haven't spoke about these in a while, right? And that's because the Jack Jackson industry has been really kind of boring. Avant, I have spoken about it a few times. Their numbers have been tremendous out of that company, okay? So my opinion is in this space, companies like Avant and Planet are in their bottoming phase here in the first half of this year. And I believe these stocks will show strength in the second half of this year and obviously moving into future years. They've just been in a bad place. I mean, the whole industry's been in a bad place. Federal legalization, a lot of people aren't confident that's coming anytime soon. You had a lot of these companies in the MJ space, right, the Jack Jackson space, that were way over leveraged and have gotten themselves in a lot of problems in 2022 and 2023, and basically have had to face bankruptcy, which means liquidating a lot of product, which means pricing plummeting. It looks like pricing has really started to stabilize in the space, and when I see pricing stabilize like that, like it is, I believe that that's a bottom for the market, and I believe we're going to kind of trend up from here. And in the second half of the year, you'll see a lot of strength in these sorts of stocks, and that's what I believe will play out. We'll see what happens, obviously, and I think there's also going to be a lot more clarity in the industry in general, and for a lot of these stocks, and so. That's my opinion. We'll see what happens, obviously. Vegas remains strong. I think Planet is going to put up some extremely strong numbers this summer out of the Vegas location. I think it's going to be packed. This is also year 3 of the Orange County location. I would not be surprised a lot of times for physical retail locations, you see a big kind of game change for your business in the third year. And so I wouldn't be surprised if the Orange County store is going to be really strong this summer as well. And if they start posting some really positive numbers for the first time in a long time, the stock price will reflect, and you'll see it kind of, go up quite substantially in quite a quick amount of time. We'll see what plays out. That's what I believe is going to happen there with those sorts of stocks. Okay. Now, Shopify. So Shopify's up 77% year to date now at this point in time. It's had an incredible move, right? And it was interesting. I was reading this gentleman basically downgraded Shopify stock. He downgraded it after, the stocks had a big rise. He says it's no longer look attractive. Its shares are up 30% this month. Now, if Shopify didn't make the moves it had made recently with obviously getting out of a lot of the costly businesses, logistics moves, obviously firing 20% of the staff and things like that, I would say, yeah, this is probably about it for Shopify, and it's probably going to be in no man's land for maybe the remainder of this year. But since they made those huge moves, I don't think money's going to stop coming to Shopify stock, to be quite frank. Okay, here's the situation. Analysts are way off. And I mean, not like a little off. I mean, so far off, they have no clue on how profitable Shopify is about to get over this next few years. Okay. With the levels of firing they've done, and the fact that they're going to watch hiring in a major way over this next couple of years, and after the logistics moves to get out of some businesses that would probably cost them a fortune, the profitability of this company, the gross profit, the operating income, and the net income are going to fly to the moon for this company over this next couple of years, in my opinion. I mean, we're talking about you're going to see high double digits sorts of moves, maybe even some triple digit moves. And so I believe that analysts are way off in their numbers. And I think what you're going to see play out, specifically starting in the third quarter. Second quarter, I'm not confident in because they're going to have a bunch of one-time expenses. It's going to be a messy quarter. But starting in the third quarter and then moving into the fourth quarter, in my opinion, you're going to see some huge upside surprises for Shopify. So it's possible Shopify could be in the no man's land for maybe the next 3 months. But after that, I think that's where things start to get really fun and you see another acceleration. Because then when Shopify starts putting up some incredible numbers that Wall Street has to go, oh my gosh, they're all going to have to start bringing up their numbers left and right. Then they're going to go on a massive upgrading cycle of the stock. And so in regards to Shopify here, folks, I mean, I think Wall Street money is going to continue to flock into this one. And let's be honest, Wall Street wants to be in this stock. They can't play. They can run out of this stock for a little short-term period of time. At the end of the day, everybody wants to own Flip and Flapjack. And Shopify is like an NVIDIA. Wall Street wants to be in NVIDIA. Wall Street wants to be in Shopify. They can try to lie for a certain amount of time. They all want to be in this stock. Okay? Let's just call it what it is. Okay? They all want to be in the stock, right? Now, next thing I want to show you guys here, okay? Texas Roadhouse had earnings. This is a dividend stock I've been buying recently. I want to show you guys what an A- quarter looks like. Is it an A+? No, but this is a great quarter, okay? Revenue up to 18% roughly on a year-over-year basis. That's an incredible number there. Income from operations, this is the one thing I wasn't happy with because obviously this grew at quite a bit less than revenue. I really want to see, income from operations being up as far as a percent, roughly in line with revenue. So that was why I gave it an A- and not an A+ quarter, right? As far as net income, up quite substantially, not up quite as much as obviously revenue was up, but still up in a pretty nice way. And then if you look at EPS, it was up roughly in line with revenue, which is very, very impressive, right? And then they also upped their dividend, okay? That's what a tremendous quarter looks like for a company, okay? Now, the other interesting thing I thought for Texas Roadhouse was they basically have commodity cost inflation being up 5 to 6% and wage inflation being up 5 to 6% for the company, okay? So in my opinion, there's room for upside here because I think we're going to probably be lower than those numbers. I think it's going to be more like 3 to 4% for the full year rather than 5 to 6%. That's my personal opinion on that. Obviously, a company like Texas Roadhouse and their management team, they're always going to take a conservative look and look more what the trends have been. Guess what? Trends, if you look at trends for inflation, we've been in kind of 5 to 6% numbers. So that's what somebody like a Texas Roadhouse is going to look at and they're going to say, okay, we're going to roughly stay in here, right? They don't want to say we expect 3 to 4% and then 5 to 6% comes in, right? Then they look like, what are you guys judging this off of? They can't be predictors. They just have to look at what they're looking at and make those judgments, okay? And so I actually see room for upside for a company like Texas Roadhouse. And I wouldn't be surprised if in the back half of this year, you actually see Texas Roadhouse accelerate their net income versus their revenue, okay? That's my personal opinion in regards to that, okay? Once again, make sure you join us in the Patreon. That's going to be linked in the description down there. Chance to to win a membership in the private stock group. We're drawing 2 names. That drawing is going to be very shortly here, so make sure you get in there ASAP. That will be pinned comment down there. You also get to see the moves I make in the market and plus be part of that Discord chat there. And then for everybody that makes 6 figures plus, make sure you check out the pinned comment down there and enjoy that workshop I put together last night for you guys. Much love as always, and have a great day.